What's going on, everybody? This is Jack with the Trading Tribe. Today we are back at it again with another price action hack or price action tutorial on kind of a strategy or a hack that I use while I'm really in trades to spot if I should stay in the trade. So hopefully this is really valuable for anybody out there, kind of regardless of where you're at in the learning curve with trading. I think this is something that can really help you get out of bad trades or get out of trades that maybe aren't working as planned. And if you do feel like this video is valuable, feel free to like and subscribe to the channel. We have plenty more of these to come, so excited for more as planned in 2023. So for today, I'm just going to use natural gas as this example. I am mainly a futures trader, but this can really be extrapolated to any sort of trading out there. And this is something I use at least when I'm bullish on a given day and I'm buying as I'm trading. This is a really nice strategy to kind of help you with, is your trade actually working? And are there really warning signs showing on the chart? And what we're really going to focus on today is what I like to call bullish weakness. So obviously when we're trading, right, we're either going to be bullish or bearish typically on a given day. And in this day, for example, right, price was really grinding higher all day, right? So this is a picture perfect example of when direction's extremely clear, right? We know we want to be on the buy side of a given trade. We know that's probably the easiest way to make money on a day like this because really the entire day, right, it was just grinding higher and higher and higher. And one of my multiple strategies that I like to trade is what I like to call breakout retests. So if we notice, right, there's multiple ways to obviously trade this given day. But for me, right, what I really liked about this day is every time it went to form kind of a new ceiling, it would eventually break that ceiling. So if we drop a level, around here, we'll notice that this was 1 in the morning central, so a little bit early, but just kind of to show, case in point, that price would come up to a level, fail, come up to a level, fail, and then at some point, right, it would hold the ceiling and it would break the ceiling for a major move. This is what I like to call a breakout, right, where there's a ceiling that eventually breaks for a major move. And the nice thing about these breakouts, right, is typically price will come back to that level on a bullish day, and that area will serve as kind of the new floor, typically, right? So in this case, this was really early in the morning, so not a ton of volume quite yet. So it didn't even come back to that level, but we'll notice at the end of the day, it rebounded really close to where we thought it would. So these are typically really nice areas to trade off of because your stop loss can be a little bit below that level and you have a really tight risk compared to the reward that's possible, right, with the given trade. So in this case here, if we take away kind of the time of day, if we were to swing here, right, maybe a stop loss of 30 ticks, 40 ticks, right around VWAP, but that was worth 112 ticks, right? So you're trading for 1,000 and maybe 1,200 bucks, and you're only risking $300. So that's almost like a 4-to-1 risk to reward ratio, which is really good. One nuance here, though, that I like to keep in mind is when we're watching for breakouts, right? Like we were on this day. Sure enough, during the actual trading hours when I was at my desk, it kind of started setting up for another one. So we'll notice here, there was kind of a zone of highs, but we'll notice it was popping up, failing, popping up, failing, popping up, failing. And it did this, 5 or 6 times, and then it ended up pushing through that level, right? So this is my bread and butter. I love to see this, especially when you keep in mind the time of day, right? This is when the volume's typically stepping in throughout the day, and these are where the price action patterns are the most reliable. So this trade here, right, where it popped through our zone and then came right back down, we'll notice, similar to that earlier move, we expect this zone to act as the floor now that it was broken. So exactly the same as the prior breakout. But one thing we do want to see when we're trading breakouts or we're bullish in general, right, is we want to see higher highs and higher lows, right? Those are kind of the two signs for a healthy uptrend or a healthy breakout. And in this case, right, we did see higher highs, right? We had a couple highs printed, and then it did turn around and create a low here. So this is actually where I got in. But we do kind of want to see it break that high. So ideally, right, in an uptrend, at some point it comes and breaks this level, right? It makes a new high, similar to what it did earlier, right? Almost all day, really, it's made new highs. But we'll notice, right, it didn't make new highs, right? Failed once, failed twice, failed 3, 4, 5, 6, 7. So price will typically show you when it's slowing down. And one thing I really like to keep an eye out for on an uptrending day like this one is when the higher highs stop. And when they stop, right, the trade's risk goes way up because you got to think of trading as kind of a herd mentality, right? Everybody else that's a trader is buying on a day like this, but people will start to sit on their hands if it's not making higher highs and it's not looking healthy, right? And then vice versa, right? If it's not making higher lows, that's also a bad signal. So we'll notice the low was really at this top level in our zone, top level, top level. For a little while, it was making higher lows, but then we'll notice here it made a lower low and a lower low. So these are another bad signal that price could be potentially slowing down. And this is a really nice technique to use on just when you should maybe get out of a trade early. Because if you notice, right, let's just say we got in right here in our zone, right? Our target would most likely be up here at that high because we expect it to make a new high. Obviously, you have to plan accordingly, and sometimes it does not go according to the plan. So maybe you move your stop to break even, or maybe you take it for, a small gain into one of these pops. So you easily could have still made money on this trade, but really important to know that when the higher highs stop and the higher lows stop, right, that means the trade is slowing down, right? And there's a little bit of weakness in the market. And if we zoom on a little bit, we'll notice the second it made that higher or lower low and the lower highs, it broke our zone. So at the end of the day, if we just set our stop loss and set our target orders, we would have lost this trade versus actually being cognizant of the chart and letting the chart really tell us the story, right? So here in this case, we would have actually gotten out probably for a loss because if we're getting in here, we're probably having a 30, 40 tick stop loss right outside of the zone. And sure enough, it ended up getting us out. And this risk to reward was still really good. If we got in here per contract, we still could have made upwards of $1,000. So tons of profit potential to get, with this trade. Even in these little kind of mini pops we could have made $500 to $700. So a lot of money to be made, but a really nice way to understand really when the chart is slowing down and really a way to save you money, right? Because there's no reason to take a loss here. This trade was still a great breakout retest, but it just kept showing you, right, that it was weak, that it was weak. And then with the lower low, especially, that was another bad sign, right? We want to see it make higher highs and higher lows. So hopefully this really helps you guys. I think this is a really kind of unique nuance to trading where when you're in trades, obviously you want to stick to that plan, but this is a really good way to make audibles, right? To actually check price action and make sure that strength is still showing. And this will be a really nice way to actually increase that win rate because it'll help you get out of bad trades before they turn into a bad trade. So hopefully this really helped everybody out there learning how to trade or that is already profitable. Excited for the content coming on the channel and stay tuned for the next session.